Hello traders and welcome back to another Conquer FX webinar. Today we're going to be talking about finding high probability setups and what are the characteristics involved that make a high probability setup in the first place. Now, basically, when people come to me for mentoring or have questions about developing trading plans or just questions about their overall trading process, these are some of the problems that I see on a day-to-day basis, and we need to discuss the problems to truly understand why trading high probability setups in the first place is a must for you to succeed. They're spending hours at the screen because they don't know what their ideal setup is, what is their highest probability trade setup. They're constantly looking at the chart. They're sitting there for hours. They haven't got a clue what they're looking for, and they're basically clueless, and this feeling of uncertainty then obviously increases with that due to their lack of understanding of what they're actually looking for in the first place. The results usually look like a roller coaster. So instead of having an equity curve that has some steady growth, it looks more like something like this. Okay, so this is usually down to over risking, which we're going to talk about here in a moment, but also down to just no consistent process there at all. And like I said at the start, they're usually running after movement instead of scouting opportunity. There's a very, very big difference about trading something that is just based off movement, so just seeing volume in the market and trying to jump on that momentum, compared to actually knowing what you want to see, when you want to see it, how you plan on exiting that trade, how you plan on entering that trade, how you plan on managing that trade, and how deep of an understanding you have about all the different variants, ifs and buts about that trading opportunity itself, and how do you plan on managing those variants. That's the sort of detail that we need to go into that really, in my opinion, makes a high probability setup. Because at the moment, and what I see on a day-to-day basis, is that everything you're doing is lacking consistency, and therefore that's going to mirror in your actual trading results. The way you journal lacks consistency. You're only journaling your winning trades instead of actually doing the deep work on your losing trades. The overall trade process itself, you don't have a consistent process, even down to the time where you come to trade itself. There's no consistency behind it. And then even with your risk models, no one has any consistent risk models. I'll assign this much risk to this type of opportunity and this much risk to that opportunity. Nobody is able to clearly define rules around that, and therefore they can't even have the buying power or selling power to confidently execute on these higher probability setups, because they don't know what their higher probability setup looks like in the first place. Because that is something that a lot of people won't understand, that some of these bigger traders that you see are trading at really high level prop firms and everything else. They're not just trading, your 1%, 0.5, 0.25%. They have certain opportunities that may happen 2-3 times a month, maybe even just once a year, where they're able to put size behind it because the probability of it playing out is so high. The last thing is they're usually very highly emotional, and this is due to some psychological problems that I think we'll be discussing throughout this webinar itself. But a lot of the time it's falling back into that expectations trap, where they have an expectation that this trade can give them X, they don't get that, then they get very highly emotionally attached to the trade, they go on tilt and then blow their account. Once again, simply down to not having a deeper understanding about themselves and then what they're looking for in general. Because if they knew what they're looking for on a much deeper level, they probably wouldn't have such a high expectancy, because when you know what you're looking for with clarity, you're realistically going to understand the probability and the odds behind that trade setup itself. Now, what's my plan in this webinar? It's basically to show you what a consistent process looks like. It's to show you what are the characteristics of a high probability trade, what is the correct mindset involved, and much more. So let's get straight into this. So on the screen here, you can see that we have the entry, we have the exit, trade management, price positioning, market phase, risk management, and time. Now, this is why the mentorship is called C7, because these are the 7 key pillars that I believe make up any trading plan or any trading strategy system, whatever you want to call it. And in order to find your high probability trading setup, you need to strengthen the core parts that make up your strategy in the first place. So that comes down to these 7 key pillars. Now, I've explained this before, that if you took 7 pillars, okay, so let's just do this really quick. 1, 2, 3. If you took these 7 key pillars and imagine that these 7 pillars were holding up an overall structure here, which is your strategy. Imagine the foundations below this, below each pillar. Okay, and let's just say that the construction companies spent the majority of the time only focused on these 4 pillars, because these pillars were fancy and everyone was going to see the work here, because the entrance was coming into the structure this way, whatever. Okay, we understand the analogy. And let's just say it's everything here. If they only spend time on these 4 pillars, what's going to happen to these 3 pillars when the structure overall is put under stress, or when there is some friction, high winds, whatever it may be? Well, pretty much this is going to collapse. And therefore, if this side weakens and this side collapse, the overall structure is going to fall. And that's the exact same way I like to think with strategies. A lot of the time people are working only on their entry, their exit, and sometimes their risk management. I think this is the last thing people really look at until they experience enough pain. Maybe even down to the trade management. A lot of the time people are looking at this because this is fancy. This is where we get the sniper entries. This is where we get the sniper exits. This is where we get the management of the trade, where we're managing it to the pip. Do you know those Instagram traders where you see they're able to get out exactly at the pip? You know, some of the best traders in the world. I'm completely being sarcastic here at the moment, by the way. But this is what people usually focus on. And the fact of the matter is that then they wonder, why is their process not consistent? Because first of all, they haven't identified where their high probability setup is positioned on any given day. Is it positioned at the higher low of the month, higher low of the week, the higher low of the daily candle? Is it positioned somewhere at the medium price between those levels? Is it positioned at a support level or a resistance level, an order block? All these things are important. What market phase is it positioned at? Or is it in? You know, is it in a trending market? Is it in a ranging market? Is there actually no clear phase at all? And what does a no clear phase look like? Okay, so it's not enough to say that your higher highs and higher lows are in a trend. Try to systemize it, that we can say, right, my ideal conditions like this. These are my ideal conditions to trade in. So what you would do is you would basically go on TradingView, you would mark up your setup. So let's just say you're trading off some sort of supply or demand level. That market comes in and, you know, moves up higher. So you draw up your demand levels. And let's say you just got another opportunity here and that market came in deeper and you were able to move up higher here. Okay, let's just say there was 2 opportunities. And you're seeing within this range of data, you're getting a lot more accurate and high probability setups rather than ranging markets. Well, what you would do is you would add in some sort of moving average or some sort of systematic way that if the 21 and the 50 moving average, for example, are beside each other in a fan-like structure, well, that might give you the ideal market conditions where you will find your high probability setup. This is just a simple way to systemize the overall approach. Then when it comes to risk management, you know, understanding if you have different variants of your system, so you may overall trade support and resistance, but are you trading from resistance areas or are you trading the pullback? Okay, for example, well, you might find in your own data that maybe just trading straight from the resistance area here and looking for reversals might have a higher probability than trading the retest. Well, if you find that, well, then you test that, build the data behind this, and you might be able to develop systems where you're able to assign risk to different models that are obviously going to give you a higher return over the longer term. And please understand, I'm talking about the longer term here. I'm not talking about today, next week, this month. I'm talking about over the next 2, 3, 4 years. It's very important to understand. And then secondly, time. Will you look for the daily candle to close and then you'll get the next 4-hour candle here to be able to catch the reversal? Will you only trade, you know, let's just say we've Asia, London, New York. Will you only trade London and because your ideal setups are within this London session, or maybe you can only trade during these times? Well, then when you're backtesting and finding your high probability setups, you should be going back and looking only at the London session trades, asking yourself, What is the biggest move during the specific timing period that I'm going to be available for every single day? What does it look like? And is there any consistent patterns around this that would allow me to develop some sort of template to spot the opportunity developing before it actually happens? This is exactly how we find these high probability setups. Now, the characteristics of a high probability setup, there's some things that I think are very important to understand that make a high probability setup. So we have the pillars, we've strengthened them, we now have a very, very clear picture of what we're looking for. I think it comes down to specific timings. Know when you want to trade, know when you want to see it, know what session it should be, roughly when is your trade setup more likely to occur. For example, if you're trading off a 4-hour chart and you're waiting for daily candle closures, well, how will the market, how will it react? Will it react in the first 4-hour candle? Apologies, I lost myself there. I'm just actually watching a trade here on the right hand side of my screen. But for example, if we have an area of resistance, if that market is coming up here and we have a daily candle closure, and then you jump onto the 4-hour and it looks something like this, will it usually be the first 4-hour engulfing bearish candle off that area of resistance that you're looking to take the trade off? Simple timing techniques like this, or even just down to the session. Will you wait for hourly closures at your level to look for some sort of flipping nature? If you don't know what flipping nature is, I talked about it in a timing rule on my YouTube channel in a previous video. All of these different things are going to make a massive, massive difference. So understand your timing, understand when you want to trade, when you want to see it, what it should look like. Okay, so we've talked about specific timing. Next, I want to talk about decent risk reward ratio. I think this is pretty self-explanatory. We want to have a decent risk to reward, and overall then helping the odds of our overall system play out. Because when you start actually being able to understand what you're looking for, when you're looking for, how it should move, all of these details with real clarity behind it, everything becomes easier. In terms of executing the trade, in terms of even turning a profit. A lot of people are just missing clarity. They're missing the real details that make their strategy work in the first place. The next question is, they're duplicatable. Is your setup at the moment, is your whatever you consider your high probability setup to be, is it duplicatable? Can it be done over and over again? Does it happen every session? Does it happen at least once a day across one of the instruments you're trading? I personally think this is very, very important. Now, of course, you're going to get less setups, depending on the style of trader you are. Obviously tailor this to the type of trader you are. I'm not expecting some swing trader or positional trader to have a high probability trade setup every single day. I'm speaking probably from a day trading, scalping point of view. But that doesn't mean that you're going to get one every day either. The point is, know what it looks like. So when it's there, be able to execute it on any given day. Then you have a process or template to spot the opportunity before it happens. There's no point of knowing that the market, does X 80% of the time. I've talked about this before. Pound dollar will come back to its opening price every week 83% of the time, around 63% of the time on a Tuesday. And then the odds become less and less as the week carry out. So what you need to understand is, what is the template that allows you to basically capture that move? So if Monday opens up, I'm just using this for an example. I'm working with statistics here. I'm playing out a high probability setup. If Monday opens up, and this is the opening price down here, and then Tuesday opens up now, what are the odds, or what is the template going to be? What should it look like? Where will I be able to enter? What will my entry look like, and how will I manage that trade if I do get an opportunity to short this market back to the weekly opening price? All of these questions are very, very important to understand. So if you take anything away from this YouTube video, and unfortunately I'm going to have to cut this short, as I just said, I do have an opportunity here open at the moment that I'm just looking at on the right of my screen that I want to watch very closely. But if you have an opportunity, if you have a high probability setup, okay, Ask yourself, does it really have clarity behind this? If you don't have a high probability trading setup, yes, this is how you build one. You build it with clarity and lots of detail included. What it looks like, how it should move, where you want to see it, when you should see it. All of these questions are very, very important. Understand that timing is important. Understand that the 7 pillars are important, down to the entry, the exit, trade management, price positioning, market phase, risk management, and time. All of these pillars are important, and each one should basically be given as much attention as the other. So like I said, I just need to cut this video a little bit shorter than I actually wanted to. But if you have any questions, leave them down in the comments below. I will make sure to get back to all of them when I can. If you did like this video, please like, subscribe, and comment. I would really appreciate it, as it does help the channel. But the main key points that you need to take away from this is knowing what you want to see, when you want to see it, how it should move, what it should look like, making sure that each key pillar is strong. Make sure that if you're doing testing and back testing, the best way to go about this is to even split this up. If you want to make a plan for the next 7 weeks, give each pillar a week of testing where you go into detail behind how you will enter the market and test everything. Test all the beliefs, test your current plan, your exit, your trade management, the price positioning, market phase, risk management, even down to the timing. Is there specific timings where I have a higher probability of this trade setup playing? Maybe it's around a particular market open. Give yourself the necessary time to strengthen all of these pillars. And while you're actually carrying out that process, you'll probably find more out about your plan than you ever had before, which will therefore allow you to spot the opportunities that really move and move quickly. Those setups that you can consider high probability setups, you will find that in your process of testing and strengthening these 7 pillars themselves. So overall, guys, that is it for this video. I hope you enjoyed this YouTube video. Like I said, please like, comment, and subscribe, and I'll see you in the next one.